The more money you have, the more money you make. In this video, we'll look at why sayings like this exist, why your net worth can take off after hitting 100,000, and most importantly, what you should focus on to reach this milestone and continue growing your wealth beyond it. Welcome to Sage Investing, bringing you timeless investing wisdom. If you're looking to improve your investing knowledge, make sure to subscribe and hit the like button if you found this useful. Legendary investor Charlie Munger often stated that reaching your first $100,000 is the hardest financial milestone, but once you get there, your net worth starts to grow exponentially. So why does net worth explode after 100K? Many people think it's because reaching a certain financial level gives you access to exclusive opportunities, like better investments or insider knowledge, that allow wealth to grow faster. And while there's some truth to that, there are two much simpler reasons behind this phenomenon. The first factor is the power of scale. Think about what happens when you invest your money. Let's say you're earning a 10% annual return. If you invest $1,000, that 10% gives you a return of $100 after 1 year. But if you invest $10,000 instead, that same 10% return now gives you a return of $1,000. And if you invest $100,000, your return jumps to $10,000. The percentage doesn't change, but as your starting amount grows, the actual dollars you earn increase dramatically. This is why larger investments grow faster. The scale of capital works in your favor, allowing your wealth to multiply more quickly as you accumulate more. The second factor is compound interest, which is often called the eighth wonder of the world. It's what happens when you earn not just on your initial investment, but also on the interest it has already generated. Over time, this creates a snowball effect. For example, if you save $1,000 every month and earn an 8% average return, it would take you about 7 years to reach $100,000. But the next $100,000 will come much faster, in just 4 years, because now you're earning on both the original $100,000 and the interest it has already generated. The third $100,000 takes just over 3 years. And once your wealth reaches $1 million, earning another $100,000 from interest alone can take just over a year. The hardest part is always at the beginning, when your returns feel small and insignificant. It can be frustrating because it seems like you're not making any real progress. But this is the crucial stage where you're laying the foundation for compounding to take over. Once that momentum builds, the growth becomes almost automatic. So how can you reach $100,000 faster? The first thing to focus on is starting as early as possible and giving your investments time to grow. Time is your greatest ally. Let's say you earn $60,000 a year and decide to invest 20% of your income, which works out to $12,000 annually. At an 8% average return, after 23 years, your investments would grow to about $730,000. Now here's where time really shows its power. If you keep investing for just 4 more years, you'll cross the $1 million mark. Those final years are where the biggest gains happen. This is why every day you delay starting is a day you lose out on compounding. Even if you don't have a lot of money to begin with, the key is to start now, no matter how small the amount. The second thing to focus on is increasing your contributions. You don't need $100,000 up front to start investing. Instead, work on consistently contributing more each month. A lot of people spend their time trying to chase higher investment returns, aiming to squeeze out an extra 1 or 2% per year. And while that can help, the real driver of growth is how much you invest in the first place. For example, if you invest $200 a month for 30 years at a 10% return, you'll end up with just under $400,000. If you somehow boost that return to 12%, you'd grow your money to just under $600,000. But if you double your contributions to $400 a month instead, your investments would grow to over $800,000, even if the return stayed at 10%. The takeaway here is simple. Rather than obsessing over trying to beat the market, focus on maximizing how much you can invest. Look for ways to increase your income, whether it's through salary negotiations, side hustles, or cutting unnecessary expenses. Think of the stock market as a tool to multiply your wealth, not as a way to create it from scratch. Building wealth is a long-term game. It takes patience, discipline, and a clear understanding of how to use time and scale to your advantage. The journey to your first $100,000 can feel slow, but once you hit that milestone, everything speeds up. Stay consistent, keep investing, and let compound interest and the power of scale work their magic.